Hello everyone, and welcome to our VideoCon recording on our way towards the Responsible Investment Live conference this early summer, originally scheduled for Paris. Now we're going virtual, and we're going virtual for this experts format as well. Climate strategies, ESG is all the rage currently, and we're going to discuss it as well with two experts that I'd like to welcome today. For one, there's Simpson from CalPERS and Berenike Wiener from Evangelische Bank, the large Lutheran German bank. So ladies, welcome tonight. So could you both kindly describe your business and your personal role in it when it comes to making investments more responsible, please? Maybe Anne, maybe you can start.
Thank you, and congratulations on convening this wonderful discussion. It could not be more important. CalPERS is the organization I work for. That stands for a pension fund, which is so big it's one of the top 10 asset owners in the world. And we have a global portfolio. So the issues of sustainable investment, where we take responsibility as a fiduciary, is fundamental to all of our investments, be it in public markets, private markets, the United States, Europe, Asia, and beyond. And for that reason, we've developed a sustainable investment strategy, just coming to the end of its first 5-year cycle, in which we identified a series of priorities that were vitally important, both for risk management, but also for exploring new opportunities. Because as a pension fund, our day job is investing our members' assets to make sure we can sustainably pay those benefits over generations. So the responsibility that we have is absolute and cannot be compromised. We have to ensure sustainable value creation over the long term, and that requires that we think about issues like climate change, like human capital management, governance, data, corporate reporting. In our strategic plan, we've identified these issues as vital to us being able to sustainably pay benefits for the long term.
Berenike, what would be your take on that?
Yeah, thank you very much. I'm very happy to describe first my business and then my role. So as a corporate organized credit institution, the Evangelische Bank is a leading long-term specialist bank for customers, for the church, for the social welfare, health, social economy sector, as well for private customers with a church-orientated value orientation. The Evangelische Bank is currently the largest church bank and one of the largest cooperative institutions in Germany. For business, the Evangelische Bank focuses or finances social projects in the area of health, as well as the care for the elderly, the youth, and disabled care, education or affordable housing and private housing. And invests in projects, companies, and institutions that make a positive contribution to the integrity of creation. So the Evangelische Bank bases its business activities on the 17th Sustainable Development Goals, so the SDGs, and the EMAS Plus criteria. So this is in a nutshell what the Evangelische Bank does. And to my personal role in the bank, I am Director of Strategy and Head of CSR and Sustainable Finance since September 2019. And while the sustainability has long been an integral part of the Evangelische Bank overall bank strategy, sustainability also means constantly evolving. So I'm responsible for the operational implementation of our sustainability strategy. And our sustainable strategy is constantly being further developed, especially in areas like the loans book, as well as in the investment process. And for sure, even for a sustainable focus bank like the Evangelische Bank, sustainability is a never-ending improvement process.
All right. Now concerning climate change, have we lost a year? Actually, 2020 apparently was a very difficult year. We were all covered up in COVID-19 matters, but the heat was there. The climate situation didn't improve as much, at least not strategically and organically. So do you and Berenike think that this was a lost year? And if you want to start.
Well, thank you. I do not view 2020 as a year that's been lost for two reasons. The first is actually the pandemic showed that the global economy can be brought to a halt, in this case for public health reasons, for the terrible impact on communities and terrible death and suffering. But it shows that we have it, that the invisible hand of the market can be steered by the visible hand of government. And that's a very important reminder that this is within our choice, within our control. We're not the victims of unstoppable forces. So that realization, I think, certainly for investors, has sharpened their focus on the issues of allocating capital and also making sure through their stewardship that they're pushing the transition forwards. Of course, we're also, I know that the COP26 had to be delayed for a year, but in a way, that's given us some opportunity to rethink and regroup. And the second point about this is not a lost year. I want first to honor and acknowledge the loss, of hundreds of thousands of lives. In the United States, 400,000 more people than were lost throughout World War II in a year. So we cannot fail to be thinking in terms of the impact on human communities. This is vital to remember. But what it also means when we're thinking about this climate change transition, it's reminded us that partnership is our way forwards. Whether it's climate change or it's the pandemic, we need the business community, we need investors, civil society, we need government, we need unions, and all players in the financial ecosystem to cooperate and coordinate to move this forwards. So I would see this tragic year as being a profound moment of reflection. But I'll give you one example. We've seen companies continue to make net zero commitments through this period. For our work, we've not seen a slowdown in pace. If anything, there's an acceleration.
Berenike, what would be your take on that?
So basically, it has to be said that we all have known about the relevance of our climate-related action, not just for a few months or a few years. So we all have the scientifically based understanding that we are consuming too many resources and we are destroying the natural ecosystem. So the mass of carbon emission is accelerating global warming. So most of us have also been aware of the consequences of this year. Yet little has happened. But I think since around 2018, so question of environmental protection, for example, or the responsibility of social and environment have reached the public debate. So also strongly supported by media reporting. So I think the financial system as a whole is still rather hesitant. So however, in many institutions, a process has started. And some institutions or financial institutions are at the very beginning. And on the other hand, others are well advanced in their ESG thinking and ESG acting as well. Therefore, I think we would not, or from my personal view, I would not speak about a lost year. If at all, then all governments, companies, citizens together have done too little in the past decades and have lost too much to mitigate the effect of climate change. But now we should all join forces and set the courses for a sustainable future in our areas. So I think it's time to act. not time to debate, it's time to act. So just a little words to the Evangelische Bank, because in 2020, in September 2020, we launched our climate strategy, and we have 4 goals. I would just tell you about 2 of them. We will actively support the transformation process of economy and the society. We want to expand our range of products and services, taking climate-related aspects into account. And I could tell you much more goals, but in my personal view, or my personal initiative for 2021 is, I see the ambitious implementation of the Evangelische Bank climate strategy. And I think this is very ambitious, and it's very, it's a hard work. So it's time to act. Just start every day, and the bank is unlikely to join any other external initiatives as well. But we will be active as ever in all the membership and initiatives. But my personal initiative for 2021 is start and act.
We heard many times, we heard today, it's all about reporting when it comes to controlling working climate strategies. So do we actually need a global reporting standard? Anne, what do you think?
Well, I would say the quantity of reporting has increased, but the quality is simply not there. So there was an interesting paper that came out of Harvard, Seraphine, Bob Eccles, based on their work. They concluded that 90% of what companies were reporting on sustainability was not being taken seriously by investors. And there's good reason for that, because this information, we don't have standards. It's not integrated into the financials. That means it doesn't go through the regulatory oversight process. Neither does it get reviewed by the auditor. So all of this means that much of the communication that's been developed by companies probably has other audiences for whom this information is extraordinarily valuable, communities, workers, customers, and so forth. But for investors, we've got to have information of quality, of commensurate quality to the financial information upon which we make our investment decisions. So here's the good news. The stage is set internationally through the IFRS, International Financial Reporting Standards. These are used by all major markets apart from the US, and I'll come to that in a moment. But the IFRS over some years has had input from members of its advisory council, particularly for CalPERS, where we have represented for some years the Council of Institutional Investors in the United States. My colleague James Andrus sits in that role at present. We've argued there that investors need to know about not just financial capital management, but human capital management and physical capital management. So we tend not to use the ESG acronym, because I think for a large fiduciary investor like CalPERS, where we have to focus on risk-adjusted returns, we can't have a strategy without the letter F. F for finance, F for fiduciary. So when we developed our investment beliefs back in 2013, one of the important statements there is that we believe long-term sustainable value creation relies not on one form of capital, but 3. And if that's true, then you need to have a reporting regime that captures all the drivers of value, all the sources of risk. So the IFRS has now taken this to heart and just finished consulting on the idea of setting up a new sustainability standards board. This is wonderful. This is a breakthrough that investors have been waiting for years. If that's established, there'll be a place within the architecture of international accounting for the important issues to be addressed. As we would see them, this must include human capital management. It must include physical capital management like on climate change. Now, time has not been wasted over in the United States either. You will see that the Investor Advisory Committee, where I had the honor to serve until November when I stepped down last year, has put forward a set of recommendations for the SEC, which oversees the US accounting standards, US GAAP and beyond, but also the audit regulator and so forth. These recommendations include bringing reporting forwards on these issues, and there's a specific framework proposed for human capital management. This was before the pandemic. Of course, now even the outgoing or outgone chair of the SEC made a speech last year saying the condition of workers and how the COVID pandemic is affecting workers and communities is of importance to investors. So even though we've had terrible division in the United States, I think it's very important to see how consensus is being built in the investor community around the importance of these issues. So I'd finally leave you with one other example of how progress is being made by the US, and this is one of the top agenda items for the incoming administration. So this will all accelerate very quickly. It's the work of the CFTC. This is the Commodities Futures Trading Commission. These are the people who oversee commodities markets, derivatives, and this regulator, which is overseen by the SEC, produced a report last year on climate change as a financial risk to the US system and economy. And my colleague Berenike represented CalPERS on that commission, and their recommendations are to address pricing carbon. This is an externality, as economists see it, which just comes home to bite those who suffer the effects of global warming, but we need to price carbon. Mandatory risk reporting on climate change is another of their recommendations, and there are many others. And for those of you interested, I say go to the website, read the report, look at the recommendations, and then you'll see how the new Biden-Harris administration is looking at a comprehensive climate change strategy. So this is all very good news.
Berenike, what do you think? Do we need a global reporting standard in the area of ESG?
Yes, so still we have a very strong filter as a church investor. Probably just one add to the ESG reporting, because I think it's also very important also for church investors, because it would be very fantastic if there would be a global standard. So the ESG reporting helps investors all over the world to analyze the sustainable chances and also the risk which is composed in a company or exposed. But I think, in my opinion, it is very important that we have a deep awareness of climate change and the need to acting also globally. So I think a global standard would be fantastic, but I think, unfortunately, this idea is a little bit unreal, but I think we need the awareness and we need the transparency. But just back to the question, so we have very strong filter, which excludes different topics. So for us, sustainability is based on three strong pillars that are mutually dependent, like economy, ecology, or social issues. And we integrate these three pillars in as many areas as possible. So for us, it's sustainability, based on three pillars, and it is our corporate culture. So it is really in every process. It is everywhere in every decision process.
And you are pretty much involved in business and other education, which is basically a good thing. What is your assessment about the standards of addressing all matters ESG in business schools in particular? Is this a new generation that is already taught how how to live a life that is conform with ESG standards?
No, thank you for the question. I think the business school community is watching all of this very carefully. The first time I taught on this was with Ira Milstein at the Yale School of Management, and we started with the theme of the corporation in society, and that was 2007. So before not just this crisis, but the one before. I also know that Oxford, my alma mater, the dean of the Said Business School is planning a new sustainable finance class. It was very exciting. And they have Hiro Mizuno working with them on that as the former CIO at GPIF, who's been such a champion in this field. Columbia University in New York has the Earth Institute, which was established many years ago as an interdisciplinary hub. And I'm very honored to say that with two of the professors there, Satyajit Bose and Dong Gao, we've written and published a textbook for business schools on sustainable finance. It's called The Financial Ecosystem, the Role of Finance in Achieving Sustainability. And I was looking as a teaching text. And when I last looked, there'd been something like 10,000 downloads. So that's not the book itself. It's the, the teaching version. So that says there are now 10, and this is only our little project. There are 10,000 students in MBAs around the world who are using this text. And Columbia is working very closely with universities in Latin America and also across Asia, particularly in China, to build out this training. Now, I also I sit on the board of the Institute for Business and Society at Berkeley. This is the University of California. Amelia Mirzad, the head of that, has developed a program of teaching for their executive education program, and also has been building out some absolutely wonderful material for both undergraduates and graduates. So those are just a few of the examples I know about or I'm involved in. So the next generation is asking all the right questions. They're the ones who will be hit with the legacy of what we've done wrong in my generation and before that. So finance schools around the world are starting to really focus on this issue, and long may that continue.
What is Climate Action 100 Plus's role?
So Climate Action 100 Plus was convened by CalPERS when we realized that in our 10,000 holdings in companies around the world, less than 100 of them were responsible for around 85% of emissions. Think about that, the concentration of the production of emissions. And these emissions, we agreed, were systemically important carbon emissions. Here's a measure. The top source of emissions in the world comes from China, the second from the United States. The third largest source of emissions is these 100 companies, just scopes 1 and 2. So with the support of our wonderful networks, the IIGCC in Europe, with Ceres, with the Asian and Australasian regional counterparts, and the support of PRI, we were able to bring together a group of investors who share this sort of mismatch between, their ownership of a big chunk of the world economy and where we need to take these emissions in to keep in line with the Paris Agreement. So we're saying to these companies, which are in China, Indonesia, Japan, Europe, the United States, Canada, and emerging markets as well. All these companies have to, one, take accountability at board level. That means we can then hold boards accountable. Two, set targets to bring their emissions down to net zero, 1.5 degrees, net zero by 2050, or sooner. There's no way out of that. And three, disclosure. Back to our conversation with Berenike about the importance of reporting. So where have we got to? We have over $50 trillion in signatory assets under management. It's asset owners like CalPERS and investment managers as big as BlackRock and State Street. So in terms of momentum, this is huge. And next point, is it delivering results? Yes. You can find our second progress report was just published this month with a beautiful foreword by Mark Carney. And it shows that even though we're only a couple of years in on this particular project, we've already got 50 companies making net zero commitments. Now, given the scale of emissions that this group of companies is responsible for, getting 50 commitments on net zero is huge. Now, we've got a lot further to go, but we have the wind in our sails, and we will get there.
Berenike, do you believe that good investments can be return-rich investments?
Well, so I think renewable energies, they play a major role worldwide in the supplying energy for households or industry. But at the same time, however, they also represent successful alternatives to our previous approach to resources. So nevertheless, I think it would be too easy to say that renewable energies are good investment, because factors such as, for example, social standards, the location of plant, for example, the distribution of energy produced or storage, they also should play a big role. So also in the area of renewable energy, the general conditions have to be checked before an investment. So I'm convinced that renewable energies will continue to increase in their importance of the global energy supply. But they have to be checked as every investment.
All right, time is running, so it's time to say goodbye. Thank you, Anne Simpson of CalPERS, and thank you, Berenike Wiener of Evangelische Bank, for this really lively discussion. I hope to see you soon.